Good evening, everybody. All right. Hope everybody's having a nice summer evening. We were 90 degrees yesterday evening. Then we had a heavy rainstorm today. I think it's in the low 70s right now. Okay. No, I was waiting right to 8 o'clock. All right. Going to do something that we don't normally do. We kind of illustrated this in the chat room today. You have so many people coming out and saying, I changed this to weekly. That before we get started, I'm supposed to let everybody know. I think we've got one seat left for the lake, and so if you were thinking about it, get get with us. See whether you want to get there before all the spots are filled up. Anyways, we have a. I usually don't make long-term projections because we never know what's going to happen in the market from one day to the next or one week to the next. However, we can see we've had a long uptrend, and then for 18 months we've had consolidation. Didn't make it bad to trade. There was good trends, downtrends, uptrends, but notice what we're seeing right here. And this is where just the logic of candlestick analysis allows you to make evaluations that are probably a lot more accurate than the supposedly analysts that are studying all sorts of things. All we're looking at is look at the J hook pattern setting up. Now, if this is wave one, this is wave two, and wave three should be the same magnitude as wave one, what's the logical conclusion? This area right here is not going to be a resistance area anymore. That wave three could take you up here. And if it does that, what's it tell you about the long-term chart? Wave one, wave two, now wave three of this big movement tells us there's probably going to be a good, strong, steady uptrend from here after everybody's had a rest for 18 months. So again, don't usually make the yeah, it's hard to imagine. But the one thing that I've learned about the markets is it usually does things that you can't imagine. Um, all we have to do is analyze what it's telling us. So whether that does preclude a very strong move to the upside, at least we know this movement right here. This is the weekly chart. But this J hook pattern right here, kind of at the resistance level, is pretty much telling us there could be a lot more upside. So now remember, it's not necessarily the fundamentals that move us into the next wave. It's investor sentiment. You start getting every night on the news broadcast that the Dow has hit a new all-time high, and that keeps going on for a while, what happens to most people? Most people are ready to jump in because they don't want to miss the boat. That's what creates the next move to the upside. Kind of the same scenario here on the NASDAQ, and we were illustrating today. Notice when it pulled back here to the T line, let's make this bigger. Bullish engulfing signal right on the T line. The next day they gap it up, pretty much up through the latest resistance level. And what's that pretty much telling us? Telling us that there wasn't any real concern anymore of this resistance level, which means it's going higher. Well, rigid, the whoops. Usually the small caps are the afterthought. They start moving after everything else has started moving. Okay. All right, RB. So that's not to say that we won't. What the heck is this? That we won't see this start moving back up again as investor confidence starts building up, and the S&P 500, pretty much J-hook pattern, left-right bullish engulfing signal. Stochastic still heading up. Just nothing yet. Nothing yet to tell us there's any change of investor sentiment. So the reason I was mentioning the lake, because I keep getting questions, what if we already know the or signals and patterns and that sort of thing, what are we going to benefit on the lake? And it really boils down to that if you're concentrating, or if you want to be even a full-time investor, but even just a much more profitable investor, you start analyzing things on the basis that you can start anticipating when to get into things. So if we see something like this, and then they break out, kind of a bigger on this chart, kind of a potential doji sandwich breakout, again with this supporting on the T line, breaking through the that puts us in situations where we're going to be a lot more positioned to take advantage of the big price moves, getting rid of some of the deterrence of most investors' mental thinking. A lot of people say, shoot, do I want to be chasing this one? Well, if we can see that it's a fry pan bottom, and then yesterday they had a big move, kind of a breakout. Yeah, if it opened positive today, what's it telling us? The result of a fry pan bottom is in effect, or a bobble breakout. And this is why I've been pushing everybody to learn maybe 3 or 4 patterns. I've narrowed it down to every time I see a bobble breakout, I'm buying it. Every time I see a fry pan bottom, I'm buying it. Every time I see a best friend signal, I'm buying it. A left-right combo, which we'll get to. These are just high probability trade setups. Now, some people might not be comfortable, or at least maybe not able to visually recognize one of those patterns. Well, it might be a belt hold signal, or a kicker signal. If you just pick out 4 or 5, I can guarantee you're going to have more trades than you'll ever be able to handle. And then what happens when you're concentrating on a few trade setups is you become an expert in those trades, knowing exactly when to get in, when to stay in, and when to get out. Now you're not at the mercy of somebody else telling you what to do, or listening to people on the financial news stations or wherever you get your information, or even if you are following somebody like a Chuck Hughes or a Hubert Centers, um, and doing good, you're going to improve your analysis if you know what the candlestick signals are telling you at the point that they're recommending getting into a position. Okay, which ones have we done? That was MDR. All right, somebody was asking, well, when something opens up, how do you know when to be buying versus holding off? So what were we looking for today on Whiting? A positive trade. However, when it opened positive, after a few minutes we could see that it wasn't going anywhere. So the answer today was I watched STNE and it was moving positive, and ANGO was moving positive. Whiting wasn't moving. So I'm more apt to kind of bypass this and go after one of the other ones. Carl, this is the whole everything that I've done with candlestick analysis was to overcome one aspect of my bad trading, and that was my own emotions. So when we go through our trainings, you'll see that everything I do is to keep my emotions out of my trade. And the more we can analyze what's happening in a chart, the more we're analyzing what should happen based upon knowing what the signals and patterns are doing versus what we expect to should be happening. Going back to Whiting. All right, let's take a look at this on a opens up. The 10-minute chart opened up. But after a few minutes, how many minutes? Don't know. So if I want to be more specific, the 5-minute chart went up and then it kind of backed off and kept backing off, kept backing off. So if I saw the 10-minute chart opening up and then not doing anything, if I bought, I can't even say that. I'd still want to see more conviction on the 10-minute chart before getting in on the open. What candle formation on Whiting on the daily chart was the fact that you had dojis. Let's make this bigger. Almost a doji best friend. Now we wanted to see bullish confirmation of that. If you got in, what's our criteria? Well, first of all, we still have a buy signal that's in effect. If you didn't close it out today, which if I had bought this one, I would have waited till tomorrow. But what do we want to see tomorrow? We want to see it open positive and trade positive, but it's not coming back down through the T line. Now, the other element, too, of getting out of a trade quickly is if you can mentally tell yourself that 1/3 of your trades are not going to work, that takes that emotional stigma of, oh, man, I picked out a bad trade. What's wrong with me? You just have to realize. And I realize that if I get into a trade and it's not working, I close it out because tomorrow I can take that money and go find a trade that's going to be heading in my direction. Correct. It's not a dark cloud. All that is, remember where a dark cloud should occur, where the stochastics are closer to the overbought condition. So, got to keep in mind, a signal is not a signal unless it's occurring in the right place. Now, stochastics weren't up very big here, but what did this tell us? We're getting way into analysis. Notice it came up above the T line, but what was the signal that brought us back up above the T line. There wasn't a signal. And that should have been our alert that this may not be a powerful move to the upside. I noticed it will not go up since it doesn't break out pre-market high. It doesn't go up. It looked like it was up above yesterday's high, but it just didn't move once it opened up. Unlike this one, when it opened up somewhere over here, it just kept going up after that. All right, so this is kind of answering. Somebody was saying, well, how do you happen to hit so many that are working? Well, if the market's going in the right direction and you can identify the patterns, it's 2 plus 2. My stochastics are 12, 3, 3. So anyways, I'm pointing this out because as you can see, as we go through the existing positions, they all had viable reasons for being bought. And they've got viable reasons for being held. Once you get into a position, now your trend analysis becomes easy as long as they don't close below the T line. Steve, I'll look at Amazon when we get down to the biggies. MPC, same scenario. We can see the pattern. There's a classic pattern. Fry pan bottom, J-hook pattern. So if we know this is a classic pattern, because we have a fry pan bottom, now a potential J-hook, what's our visual assessment from this point? Well, this is wave 1. Wave 3 could logically come back up to this area. Now, if we know that's the case and we see it confirming, we can buy the stock, we can buy the calls, or we can put on different call spreads that will work very effectively. If you buy far from the T line, what does your stop, or does your stop go? Well, remember, the T line is just a confirming indicator. This broke out because of the pattern. So now, if we get too far away from the T line, meaning if it came up here tomorrow and the T line was down here, now we're starting to get pretty far away. I'd flip to the 10-minute chart. Or if it trades here, now I start we're waiting for the T line to catch up with making a logical place as a safety stop at the open of today's candle. I want to pick a spot that would tell me, oops, this is not where the bulls are in control. Pick out a spot that says, up, I shouldn't be in there. In this case, if it opens up here and then comes all the way back down to this level, something's wrong in River City. You want to close out that trade. So we had a lot of discussion today on Yeti. Is Yeti getting overbought? Well, kind of calculate. Here's wave 1. Here's our bobble breakout that tells us we've got an extremely high probability we're going into wave 3. But now what's wave 3 telling us? Wave 3 and wave 1 are about the same. Now I've got a hanging man. I definitely have my safety stop right here. And or if it opens lower tomorrow, significantly lower, I mean down here, if it opens right in here, that's not a big deal. But I'll have my safety stop here. But let's say it opens lower. It looks like the market's gotten soggy and going to back off for the day. Yeah, I might take off half the position because I'm up in an area where I'm in the overbought area. I've got a potential hanging man. If it opens lower, what's our conclusion, or what's our confirmation of a hanging man signal selling off, a lower open. And if it wobbles in here and keeps the uptrend, at least I've still got a half position on. Can a fry pan bottom complete within, say, a week or so? All it has to do is show that big rounding bottom pattern. Sometimes it could be 3 months. Sometimes it could be 3 weeks. All we're really identifying is what the pattern looks like. So could we be overbought here? Yes. But what's our overall pattern telling us? We still might be in a fry pan bottom situation. So you put on a safety stop, but you still analyze what the chart pattern, and that's again why I kind of stress knowing what your pattern results should produce. Saber, we can see the J-hook type pattern, but it's not moving up. And now we have a doji right on the T-line. What's that pretty much tell us? Well, they came down today and used the 200 as a support. But what's our simple doji rule? They open this lower tomorrow. What's it telling us? There's no buyers there right now. And what's it telling us about our trajectory? It's rolling over. Let's go find something better. We did Yeti. What do we got here? A doji right here at the breakout level. What's our simple rule? This opens positive. What can we conclude? There's our classic fry pan bottom, J-hook pattern. You can be buying with a high degree of probability that wave 3 is going to be the same as wave 1. On the other hand, if it opens lower on us, this level is a double top, not a breakout level. I'm going to jump ahead here. Because what can we see right in this area? Kind of a resistance level. So we had kind of a wedge forming up to this resistance level. But what did this tell us? It told us they weren't going through. Now, could they have bounced back up today? Yes. But the fact that they did a bearish doji sandwich, what did that tell us about this area? That was resistance. We shouldn't be in this trade anymore. Brad, yes. So you have to make your assessment on, is this worthwhile getting back in with the prospects that it could be doing, getting close to a fry pan bottom breakout? Or was this wave 1, wave 2, wave 3, and starts backing off? All right, so you came out. Or so the analysis is, do I want to get back into a trade here in the overbought area, thinking the pattern's going to continue, or do I go find something that's telling me I'm getting in the right place at the right time? I don't have qualms about coming out of a trade at times where it's starting to look iffy and having it move higher, because I've probably already moved my money someplace where the probabilities are giving me much better probabilities and better risk reward. Okay, let me see what else I got. Crocs, very simple. You stay long as it stays above the T line. You can see how it's pulled back indecisively over here. But what's our probability setup? But as long as it stays above the T line, we're in an uptrend. What are we looking for? At this point, looking for it to break out through the 50 to give us some more running room. Brad, if you can make 265% on each one of your trades, it'll take a long time to go broke. Bye. KTOS when it broke out here. All you can do is stay long as it stays above the T line. Brad, one of the things I found, and it took a while to be convinced because the more, as I was learning candlestick analysis, I kept thinking, wait a minute, this is too good to be true. And if something's too good to be true, it's usually not true. But I kept coming back to a simple conclusion that the reason we were studying or identifying candlestick signals is because the Japanese rice traders showed us what they were and that they'd used them effectively for hundreds of years. So it wasn't like we're testing a brand new technical indicator. It's the same thing that this chart right here could have been a rice chart in 1684. It would look exactly the same. It could be a crude oil chart in the year 20,050 because investor sentiment's not going to change. So Maxar, even though it backed off a little bit, you can see what's happening here on this chart pattern, that once it broke out through this level, it came back and used that level as a support, looking for the next J-hook type pattern. Okay, good, Brad. QD, you can see where it's heading. That if it breaks through this level, now remember, you've had a hanging man and a doji. Didn't really give us full confirmation that this was a resistance level, but because we know the simple rule of the doji, we know it's what it will do based upon how it opens tomorrow. If it opens lower, this area acted as a resistance level. It's not going to be a good trade from here. Close it out and move on to something else. Oh, whoops. Got to get to some of these. ATNX has been a very good trade. Wait a minute. There we go. Except notice what we had today. Kind of an evening star signal that closed right on the T line. We've been in this one ever since the breakout. So we've got pretty close to a 50% profit in it. And now we've got a potential sell signal. And I say potential sell signal because we might have an evening star signal, a big up day, doji, big down day that closed more than halfway down this candle, but closed right here at the T line. So we use our simple if-then analysis. If this is still in an uptrend, it needs to stay above the T line. If it opens lower tomorrow, we close it out immediately. That tells us that was the sell signal. So I'm showing this because not only does the signals tell us when to buy, it tells us when it's starting to get too risky, or not too risky, but time to sell out. So if this opens positive, trades positive, we're still above the T line. If it opens lower, close it out because we can see the signal telling us that there's been a change of investor sentiment. We did CVN. So there's a few that are getting iffy. So notice what happened today in ESV. There was our buy. There was our bullish doji sandwich. There was hitting the obvious resistance level. But if we look at this closely, now, come on. Well, for crying out loud. I don't know where this comes from. But maybe it was a bearish engulfing signal. Right here at the 50. That should have been and alert. Same scenario. We don't want to see this close below the T line. We want to see it start trading back up. If it comes down below the T line, pretty much telling us a bearish engulfing signal right at the 50. Whoops. How about that? All right. I moved the microphone. But this is the signal. This is pretty much telling us, all right, if they start showing weakness here, that was the resistance level. Close it out. This is back to the prospect or the idea of I don't necessarily need to be buying at the very bottom, don't need to be selling at the very top. If I can consistently hit high probability, correct trade ratio, correct trade ratios, where most of my trades are positive, if I can get most of that profit and then move on to another one like that, the compounding effect is tremendous. It's better than trying to tweak things out to where you're buying at the very bottom and selling at the absolute top. Bearish engulfing coming out of pie. Notice our doji sandwich or our trend kicker breakout through the resistance level. Now we've got a bearish engulfing signal. Same simple analysis. If it opens lower tomorrow, where do you think they're taking it back to? The T line. Close it out. What's the worst case scenario? They hit the T line and come back up doing a J hook. You can always buy back in. Doji sandwich. Well, doji sandwich breakout after pull back. Well, yeah, what you want to do is see whether it will support here at the T line. And Zine, which had a good trend to it. Again, bouncing right smack dab off the bottom of the trend and moved pretty much up toward the top of the trend. It closed today right here. If you happen to have stayed long after the bearish doji sandwich, you've only got one conclusion. It has to open positive and trade positive to stay in it. Now, if it does that, what do you think the next move is going to be? Back up to the top of the channel. So every time I can see something where you can evaluate the trend and the buy signal at the bottom of the trend, you pretty much can calculate they're starting to head back up to the top of the trends. Once again, this type of evaluation just dramatically improves when to get into a trade, when to get out of a trade, and move on to another good trade. So many people get, and I say so many people because I used to, get caught in a trade and they don't evaluate it based upon what the trend is doing. They evaluate it based upon, oh, this has been a good money maker for me. I'm going to hang on to it. Notice when we saw SPWR, again, J-hook pattern. Then we had the bearish left-right combo. Where do you think it was heading back to? The T-line. So if I sold it here, what's my next analysis? Over the next few days, if it does a J-hook, I can always buy it back. So if I sell it here and buy it back here, I used to not be able to do that because, boy, would that look stupid if I sold it here and I bought it back here and then I had to sell it again here. Man, you're just giving back more of your profits. Now I know what the chart pattern is. That if I sell it here and I buy it back here based upon a J-hook pattern, it's because I understand what the results of a J-hook pattern will be. That I'm buying it back with the probabilities now that it's heading back up. Without the candlestick charts, all I was doing was buying and selling based upon what they were doing to me, what the market was doing to me. No, I wouldn't necessarily go short. I mean, if you went short, you want to still see it confirmed to the short side. But that would also be a function of, let's say we wake up tomorrow and the pre-market futures are showing the Dow's going to open up down 100 points. And there's going to be some selling. Yeah, maybe I'd short it then. But then I make my same parameters. If I'm shorting on weakness, I wouldn't want to see it close back up above the T line. Something's happening to my computer tonight. Okay, so some of the biggies. Facebook. We put a buy recommendation on calls because of the little scoop type J-hook pattern that wave 1, wave 2, now we're in wave 3. Once again, with the probabilities that we could see that we were in the next wave to the upside. So whether you're trading the stock or the options, obviously when you're trading options with a larger bid-ask spread and the price having to move to catch up for the premium that you paid, you want to be a lot more accurate in your assessment of not only the direction, but what would be the magnitude of the direction. Micron, same scenario. When it came out of this J-hook pattern, we were assessing that if this was wave 1, wave 3 should be approximately that same magnitude. Something is wrong here. Isn't the, let me take a look over here. For some reason, it's showing that my 200 is here. I thought the 200 was up here. Oh, no, maybe that was a resistance level up there. Okay. NVIDIA, look at the little buying right here off the 50. Where did we think the next, notice they gapped it up again. Where do you think the next logical target is? Right here, the 200. Then if it's a wave 1, wave 2, wave 3 could be, so if it's way up here, we want to watch to see what happens at the 200. Ahmed, no, this is what I was chastising somebody today, and I'll get to the one. This is not the place to be buying. Well, Cat, what the heck? How can we do this to me? This is probably now in the stage of holding. Okay, come right over here. So if this is wave 1, how far of wave 3 is already used up in wave 1? Pretty much more than half. So your risk reward isn't all that great. The analysis is, and I think it was on Yeti, somebody was asking, well, could we be buying Yeti today? And that is the question. That most people ask, because what are they seeing? So it's in an uptrend and everybody's making money and I'm not in it. Should I be getting in it? The answer is no. The true answer is, if you've missed it, knowing that this was a good trade, you should be going back and saying, all right, what was the signal that told me to get in here, where my risk reward was much greater than buying a stock that's already in the overbought area and pretty much could be at the end of wave 3. So when you see people say, oh, I bought XYZ and it's going great, and you look at it and it's way up here, what's the tendency of most investors? They all start jumping in because they think it's going to go much higher. And again, that's why we use the candlestick signals to tell us, there's a bunch of questions here. Now I forgot. I do that all the time. I read the questions and I forget what I'm talking about. So when we see something like this, we should be asking ourselves, is this a good place to be buying? Or where was my buy spots that told me the probabilities? And it's not like you're going to have, if you miss this trade, you're not going to have another trade for 3 weeks. Tomorrow, there's going to be another 7 or 8 good trades at least. You just go find those and put your money in it. Why can't one use a close above the T line in the direction of the trend with momentum? Without a J hook, the T line seems to be a magical indicator. The first priority that we are working off of, James, is the signals. Everything else is a confirming indicator. We're not buying because of the T line. We're not buying because of a 50-day moving average. We're not buying because of stochastics. We're buying because of the signal or the pattern. Then everything else acts as a confirmation. All right. Again, Brad, taking your profits on Yeti today, probably not a bad idea. Excuse me. Now you go find a chart that looks like this. Okay. Okay. Yeah, chicken hook, J hooks are good, and they're even more relevant when you can see them as a bobble. And a bobble is just more of a oh, oh, okay, no problem, Brad. Bobble is just a more defined J hook. You can see where the actual selling is. You can see the T line acting as support, and you can see where the buying started again. Does a left-right combo require confirmation in the next day? It 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 helps. It doesn't need it. If I see a left-right combo, either on the sell side, I'm closing it out even if it hasn't closed below the T line. Okay, Arnie. Yep, there's nothing wrong with taking your profits when the probabilities start going against you. Or, in this case, if I thought things were getting a little bit dicey, just to save my mental attitude, I'll close out half the position. If it goes higher, I'm in a higher risk trade, but I'm not as much exposed, only half exposed. If it opens lower and starts trading down, I can say to myself, oh, good, I took off some here and some here. I got most of this trade. Yes. 99.9% of the time, Tony, you're going to see one of the 12 major signals. We've seen recently some 3 white horses. Let's see, was Amazon one of those? Yeah, 3 white horses. A bullish day, opens lower, bullish day, opens lower, bullish day. So what I tell people is learn the 12 major signals. 3 white soldiers, I'm sorry. Um, 3 white soldiers. Even myself, I know the 12 major signals very well. I know the 50 or 60 other signals. Sometimes I don't remember them all. So about once every couple months, I'll go back through the book and just kind of browse through and look at those and patterns and try to refresh my memory. Not so that I memorize them, but more that I that recognize them. So if I see them, I say, oh, yeah, that's a signal. What is that? Paul, if you go under our website and go to products and services, we got a whole slew of training videos in there. That could be a dark cloud. Can't tell if it's closed up here, but it's still closed above the 3T line. Now, what does it mean when it's closing above the 3T line? It means it hasn't even come back down to the T line. So you might have a dark cloud. If it's opened lower tomorrow and you were long, you might take some profits with the idea it's probably coming back down to test the T line. On the other hand, if it opens positive, it's pretty much telling us the strength of this uptrend is still being indicated that they can't even close it below the 3T line. See, did we do NVIDIA? Yeah, NVIDIA, next likely target. We've been following Disney because Disney's had this big fry pan bottom right here at this resistance level. And as you can see what happened prior, wave one, kind of a fry pan bottom wedge formation. Now it broke out today. Wasn't a real strong day, but what type of things can we evaluate for tomorrow? Well, if they open this positive and trade positive, we got a doji sandwich. What's a doji sandwich tell us? This resistance level isn't there anymore. Now we could be in the next wave, which was the same magnitude as that previous wave, meaning we could be heading for the 185, 190 area. So knowing that, instead of saying, oh, should I be buying here or buying here, you're now looking at, should I be buying here? Because it's just now breaking out. Now, the advantage of knowing what to do right as you see buy signals in a breakout is it's alerting you to get in early for two reasons. One, obviously, is that you're getting in early, hopefully on a big positive trade. Secondly, if it doesn't work, you're right back out with a small loss. Again, kind of amplifying that sage advice that you cut your losses short. So you make your losses small and you let your profits run. If Disney open lower, is it a shooting star? No, not necessarily. Remember, a shooting star is going to end or be at the end of a uptrend. This is still just, we're not even in the overbought area just yet. If it opens lower, it's pretty much telling us that they haven't broken out yet. John, let me get through the major what we're looking at in stocks, and then I'll move over. Well, as soon as I get done with the biggies, I'll go to the futures. Tesla, also in a steady uptrend. Another one that if it opened positive tomorrow, breaking out through this level, pretty much telling us there's confirming this uptrend. Netflix was looking good, but today they sold it off a little bit. It's still in a slow uptrend. What do you do with Netflix? You just stay long as it stays above the T line. See, we did Amazon. Again, that we want to see whether they're pulling it back. But the fact that they kind of broke out through this little fry pan bottom tells us wave one, wave two, wave three should be the same magnitude as this, which kind of indicates we should be closer to heading up another 30, 50 points. Apple, this is when you can look at a chart and say, which way is this going? And when you're looking at Apple, there's nothing there. So there's nothing wrong. What it does is kind of get you out of the trades or away from the charts that aren't doing anything. So you're looking for the charts that are doing something. Right now, I wouldn't be trading Apple because you really can't see any trend to this one. But things like ADI, looks like it's in a slow uptrend using the T line as support with the anticipation they could be moving up in this territory. Again, just visually we can pick out the ones that are in a trend using the T line or a support level. Roku, there's your trend, and it's not unusual at all to see when they consolidate it, when they come back up, they come right back up into that trend and continue from there. All right, so a few, oh no, commodities. Crude oil, again, the charts look exactly the same. Look at the J-hook pattern that we've got in crude oil. Where's wave one? Where's wave three? Back up into this area. Once again, giving you information that if you're trading crude oil, probabilities are you're in an uptrend, or if you're trading stocks that are related to crude oil, let's see if I can get natural gas. This is the August contract, running into a little bit of resistance here. NGAU, is that the September contract? Same thing, running into resistance at the 50. You can see how you had a little shooting star, spinning top, trading lower, probably backing off. Mitch, on which one? Yeah, if you're trying to trade crude oil, Chevron might be, again, the same scenario. If it breaks out through this level, you've got wave one, wave two, going into wave three. Any thoughts on an intraday reversal? No, don't know which direction you're referring to. On an intraday reversal, yes. If you're getting up toward the overbought area, you see a sell signal, and they're trading it up and up through the T line. Where do you put your safety stop? Probably back here or back here, because logic says if it comes down through that level, what have they told you up here? They failed this level. So that's why knowing what a signal is illustrating, that if this was trading positive, well, maybe that's not a signal. But if it opened here and started trading positive, I'm simply going to put my stop at where it opened, because logic says if it comes back down through there, not only is it telling us it's failing the 50, but it's probably going to create some sort of candlestick sell signal. Chicken Hawk, they actually had a, on Fox News, Business News, they had somebody in the laboratories of CGC today. Oh, Kramer highlighted it. Don't want to be sarcastic, but you probably want to look to short it. If okay, let's see where in the. Let me do real quick the gold. It's moving sideways. Soybeans starting back up. Where's the next likely target? Right up here. Take a look at wheat. Whoops. Wheat might be bouncing back up. Look at the little inverted hammer gap up. Where's your next likely target? Back up here. So again, you can trade. Remember, commodities are what the Japanese rice traders actually created their signals from, which was the most basic of all commodities, rice. Corn, this is September contract. Looks like it's trying to move back up. Still not a real powerful chart, but you might be heading up slightly. Yes, they missed. I think they only had 66% of the crop in the field on corn, and I think it was as low as 33% for soybeans. Now, I think they can get soybeans in the ground again. I don't forget how some places can get 3 crops of soybeans, some 2, but even though they missed the first go around on soybean crops, they can get some more back in. All right, so now what are we looking at? Oh, some of the stocks that look good. IMUX. Notice your best friend signal, gap up. Had a huge move to the upside. Now, I was lucky enough to get into something like this, and it ran up all the way up here. Where am I compared to the T-line? Pretty far away. So what do? Go to my 10-minute chart, and as soon as I start seeing my first sell signal, now whether I'm trading stock or gold or crude oil or live cattle, if it moves up big like this, the first sell signal, I take my profits. Because usually on a big move like this, when you start seeing profit taking, that means they've hit their range. So that one had a big price move. I came out up here. Now what do I look for? Well, I still have a best friend signal. If they open this positive and start trading positive, what's it telling me? The profit taking is over. Hold on to your individual stocks until I get done with these, and then we'll do the rest of them. Zixi, another one that's about ready to break out. You can be buying this one on positive trading. Solely. This is what you look for. When you see something like this, you know there's been a dramatic change of investor sentiment. Ahmed, my first suggestion would be buy my high profit candlestick pattern book, the green cover. That's going to give you everything in a nutshell as far as the best signals, the 12 major signals, the patterns, and the psychology that creates those signals and patterns. So when this happens, start watching. Solely, as you can see, has gone from the $12 area to the $22 area in just a matter of days. This is what we're also looking for, is the bobble breakout. So Valero, if this opens positive tomorrow above the 200, there's your bobble breakout. You can see the obvious. It failed at the 200, dark cloud. Time to get out. Supports right here at the 50/T line, coming back up. If it comes back up through the 200, what do you got going on? Well, if you took the 200 out of here, you basically have a J hook. It becomes much more defined when you can see where the selling started and where the buying has started. NPTN failed at the 50, pulled right back to the T line. There's your best friend. There's your inverted hammer. If this opens positive, it's a high probability trade. Where do you think your next target will be? Probably back up to this level. If it breaks through this level, where's your next target? Filling the gap right here. High profit candlestick patterns. It's on the website. Just go to products and services. This one will probably be on the recommended list tomorrow. There's your bobble breakout, fry pan bottom. If this opens positive, we'll be buying it because of this pattern right here and the fact they broke out through the 50. Okay, let's see. I'm losing my spot here. Oh, left-right combo. Left-right combo. If you've taken the high profit or the top rank signals and patterns, you know the left-right combo, which is a doji followed by a bullish engulfing signal, it has a high probability of starting the next uptrend. As we can see in Texas Instruments, it was the reason why we were buying MDR. There was a left-right combo down here, confirming that if it opened positive, it was not only confirming the left-right combo, but it was telling you the bubble breakout was in progress. And again, that's why we would be recommending this, because of the bubble breakout, fry pan bottom. Look for more strength on this one. So if you see a sector, UNH moved up dramatically today. Best friend, anticipate that after it's broken through this level in the 200, look how it came back and used the T-line as support before heading back up. More upside. So that's, if you can see that all the stocks in that sector are starting to come back up, I'd be a buyer of this one if it came back up through the 50, because essentially there would be your bobble breakout again, using the 50 as a support level. What would be our upside move? Wave 1. Thomas, hang on to your individual ones. Let me finish the ones that I at least have something to demonstrate. There's a morning star signal on Molina Healthcare. This one you can be buying with the anticipation that if they've broken out through this level on positive trading, what's it telling you? First of all, they've confirmed the morning star signal, and then they're breaking out through here, confirming that they're staying above the T line. Cal, another one that's got kind of a doji sandwich. If it opens positive, back into the profit taking, it's got a strong bullish chart. And BIDA, if this opens positive, what that tells us about this trading today? Told you the profit taking's over. Now you've got the potential of a bullish doji sandwich. And the reason I mention this is anytime you see a setup, at least you know that there's going to be a high probability result if it opens in the manner that you think it should, confirming that signal or pattern. So CNC did a bullish Harami gap up. If it opens positive, at least there's our first target right in here, which is kind of the same reason we were buying ANGO. It had a big doji gap up on what's our simple rule of a doji gap up. If it opens positive, it's going to trade positive. So when you start seeing some of these that are breaking out because of a signal or pattern, just recognizing that signal or pattern, that if this one opened positive today, what did you think this candle was going to be? The same as this right here, the first half of that doji sandwich. What did that tell us about our pattern? It was still working effectively. There's kind of our J-hook pattern. Expect more upside, NMRK. CVET, morning star signal. If this opens positive, what's it doing? It's telling us it's confirming this signal and breaking out through this level. Where's our first target? At least we can see what everybody else is watching. Let me make this smaller. Bah, humbug. What do we got going on here? Let's get rid of all the... There's your fry pan bottom. There's your breakout. There's your classic. And what type of signal is it producing right here? Kind of a double bullish flutter kicker signal. Gap up doji above the open of the previous day. Another doji, now bullish confirmation. If that's a double bullish flutter kicker, meaning if you took out these two little flutters, you've got a kicker signal. And remember, the kicker signal is one of your strongest candlestick reversal signals. And if that's a strong reversal signal, what's it telling you about this pattern? More than likely, you've got a J-hook pattern setting up. You can be buying this one, or especially the calls, on a positive open tomorrow. CBGI, you can see the fry pan bottom. Another one you can be buying with confidence, I'd say confidence, much more probability results that you could have a big breakout to the upside. AMRN, J-hook pattern setting up. INFI. Now this is more of a bullish flutter kicker. If this opens positive, breaking this level, you've got another, just the fact that you've got kind of a bullish flutter kicker, it was more of a doji on one of the other chart services. And then CMA. You can see the fry pan bottom. You can see this is what is one of the signals. I don't know what, oh, for crying out loud. This is a stick sandwich. Big up day, big down day, big up day. That's a bullish signal. So if this opens positive tomorrow, what do you essentially have? Kind of a bobble breakout. There's going to be more upside. So the whole point of learning specific signals and patterns allow you to get ready to be buying right here when everybody else is starting to buy up here, confirming your, creating your profitability, so that you're not sitting there thinking, oh, I should be buying now. You're already in the position. There's a lot of times where when I buy immediately because it's confirming a signal, I just sit and watch when everybody else is coming in later on, improving my profitability. If I bought here and it moved up here and then closed back down here, all right, the probabilities were that I'm heading in this direction. But if I get in a bad trade, I close it out and move on to the next one. Doing that on a constant cultivation basis means usually on any given day, especially if the market's moving one way or the other, or even if it's moving, trading flat, out of 10 positions, I'm pretty sure that 7 are going to be trading positive, 2 are going to be trading relatively flat, and maybe 1 down. Doesn't mean that the 1 down is a sell, it just means it sold off that day. But I kind of expect that if I've got an average, or if I've got a portfolio where I have 10 positions on, that on any given day, between 6 and 8 of them are going to move profitably. And I may have 1 or 2 moving up big time. Okay, that's about all I got. So first thing I usually ask is, anybody have any general questions on candlesticks? And hold on for 1 second. Okay, sorry about that. I had to refresh my drink because my throat was getting dry. Okay. Let me. Is a cradle pattern only or mostly effective occurring near bottom or anywhere? Anytime you see a cradle pattern, it's usually because you've seen a downtrend, then it trades flat, a bunch of dojis, indecisive trading, and then another big bullish candle. So it looks like a headboard, the flat bed, and then the footboard at the other end. Logically, it's usually at the bottom of a trend. Inverted hammer, good anywhere or only in oversold or pattern setup? Usually in the oversold area. An inverted hammer at the top of the trend now becomes a shooting star. The book, yeah, shows most of the patterns. I don't think the book has the clarity of a bobble pattern in there, but the bobble pattern, and this is why we do the sessions like on Thursday nights and Monday nights for members, so that you keep refreshing or keep adding to your visual recognition. Does a bobble breakout usually turn into a J hook? No, a bobble breakout is a J hook. Which one was our bobble breakout? Yeah. No, a bobble breakout is a J hook pattern. It's just much more defined where you can see that it failed at a resistance level and then came back up through that obvious resistance level. Which is better, left-right combo below 8 EMA or when the engulfing candle breaks above? The left-right combo is good anywhere. Then then eventually closing above the T line just enhances it. There isn't any difference between the two. The bobble just has something that you can identify with the resistance level and the support level, and then coming back up through the resistance level. It is a J hook pattern if you just took out that resistance level. Gail, yes, you should only be using your 10-minute chart if you see something on the daily chart that puts you way out of whack. For example, when you see something like a big, huge breakout, let's say, for example, went up here tomorrow, look how far away you'd be from the T line. That's when I start pulling out the 10-minute chart. Now, if I'm looking at something like a trend like this, yeah, 10-minute chart really doesn't mean all that much. Yeah, Mitch, these sessions and the night sessions are recorded. Oh, Valero, okay, yes. Valero is a J hook pattern. If you took out the 200-day moving average, you basically have a J hook pattern. The fact that you have the 200 there just makes it much more clear that that's where the selling started, that's where the buying supported, and that's where the breakout level is. What is the first pattern us newbies should learn well and train our eyes for? Penny, the analysis or the learning of candlesticks starts with the 12 major signals. Remember, each one of those signals have been presented to us by the Japanese rice traders with over 400 years of observation as well as usage. And I say usage in the sense that the Japanese rice trader family that used the candlestick signals did not become wealthy they became legendarily wealthy. They were the powerhouse, financial powerhouse in Japan for centuries, and they did it on the most basic of all commodities traded in the world, rice, which pointed out one very simple fact that prices do not move based upon fundamentals. Prices move based upon the perception of fundamentals, and the candlestick signals are merely the graphic depiction of what's going on in investor sentiment. So learn the 12 major signals. Then learning the patterns isn't all that difficult. The first two I'd learn would be the fry pan bottom breakout and the J-hook pattern / bobble pattern. Oh boy, you know, I haven't looked at book number 2. I think all 50 or 60 signals are in book number 2. The 12 major or high profit candlestick signals and patterns. I've got 3 books out. The first one was published by Wiley and Sons. It has kind of the basic analysis. It has the 12, or it has the all the 50 or 60 candlestick signals, but more highlighting the 12 major signals and a much more basic explanation of why they work. The second book, High Profit Candlestick Signals and Patterns, takes the 12 major signals and kind of concentrates on those, and then shows you how they're implemented into the patterns to make them more relevant. Then I've written the third book, Candlestick Signals, Eliminating Emotions. The third leg to the stool is you might be able to identify the signals and patterns, but if you don't have control of your emotions, you're never going to be a good trader. And the nice thing about candlestick analysis is it creates a built-in discipline so that the more you learn candlestick analysis, the more you get away from your emotional trading. Yeah, our prices are better than Amazon for some reason. Okay, Rick, go ahead and do the double line. And in 3.2 seconds, do the next double line. Again, just a reminder, if you're serious about really concentrating on getting the flaws out of your trading, when we do the session at the lake, we start from A and go right through to Z. That's concentrating on the 12 major signals, starting with the doji, and then all the elements that you can apply to your visual analysis using the T-line, the moving averages, trend lines, anything else that's going to enhance the probabilities that signal is occurring at a place that everybody else is watching. We go through the patterns. Then we kind of quantify them of which is the strongest of the what we call the top ranked signals and patterns. How you use gaps to greatly enhance your profitability. Then we go through how to improve your trade probabilities using just logical entry strategies, when to start coming out of trades, taking profits, where to put your stops. And then on the final day, we take all that information and we just simply walk through how you do very simple scanning techniques so that on any given day, you've cultivated what you might have found as 10, 15, 20 good trades for the next day. How do you narrow it down to the best trades? And we walk through that. So what this does is it kind of naturally erases some of the preconceived perceptions of investing, which are usually wrong. Kind of just puts you back into a mind frame of, all right, I'm going to do what the chart tells me because now I understand why these signals and patterns work like they do. The third book is Candlestick Investing. Eliminating emotions. All three of them are on our website. ARNA. All you can do here is stay long as it stays above the T line. I'd have a sell stop just below the T line right now. It shouldn't come back in that direction. Delta. You had a little gap up doji. You should be moving in the right direction, but I'd have a safety stop just below the low of today. It shouldn't come back down through that level. GTN, there's a nice slow curve breakout. Stay long. You're in the overbought area. I'd put a safety stop just below the 50. If it comes back through there, it's telling you they're running into some resistance right here at the T line and giving you a sell signal. Comcast, stay long with the anticipation it's about ready to break out into a new territory. Beyond Meat, slow curve, you're still in an uptrend. If you're long or if you're buying, don't let it close back below the T line. CDE, another one that once it broke out, it pulled back. Now it needs to trade positive from here. You want to see a stick sandwich. If it trades back lower tomorrow, that means they're having a hard time staying up above the 200. You close it out. And NVIDIA, I would suspect it's going to the 200-day moving average. ARA, nothing there. The fact that you kind of had an uptrend and it came down through the T line, I would be out of this trade. There's just no direction. Now, boom, had some good charting to it. There's your best friend. You can be buying this one. Notice how when it pulled back today, it used the T line as support, which for those of you not familiar with the T line, this is just very simple. If you see a candlestick buy signal and a close above the T line, you can stay long until you see it close back below the T line. The fact that this today used as the T line as support is relevant because the T line acts like a natural support and resistance level of human nature. And the reason it's natural is because nobody has the T line on their charts. So when it comes back to this level, because we have the T line on our chart, we can see the exact support level of human nature. So the fact that nobody has the T line on their charts, it becomes that much more relevant, acting as kind of a natural support level. CME looks like it's trying to break out. You stay long, also using the T line as your stop. Okay, let's see. FXC. The Canadian dollar looks like it's trying to come out of a little wave up here. You can stay long on this. Don't let it close below the T line. Splunk. Stay long, but notice that you're starting to get enthusiasm up here. Have a safety stop down here someplace. It shouldn't come back in that direction. ENLC needs to open positive. If it opens lower, you watch to see if it supports here at the T line. So you're running into a little bit of resistance here at the 50. What you'd like to see it do is open positive and trade positive. If it opens lower, you may have a couple of days of a bobble pattern if it supports at the T line. Ruby broke out nicely. I would suspect that's heading into the next wave to the upside, coming out of this little slow curve. Notice the slow curve supported right on the T line and started back up with a left-right combo. EHC, stay long. That would be your first target, is the 200-day moving average. Boeing, You can be buying this one on strength. Come on, come on, come on, come on, come on. There's your left-right combo. There's your close above the T-line. First target should be the 200. Your second target should be this little congestion area. AZUL had a nice, strong chart. There's your best friend. There's your 45 degree, and I don't know why it's not giving us more information than that. But right now, you just stay long on this as long as it stays above the T-line. CLB. This one you can be buying, especially if it breaks out through here. Notice the little kicker type signal here. Say kicker type. You want to see it open at or above the previous day's open. So you have a kicker signal pushing you in this direction. So you can stay long on this one. Log. That's a nice, definitely a nice slow curve bobble breakout. I'd be a buyer of this one tomorrow. JP Morgan. You can be buying this one. The only problem with these type of stocks is they don't move a big percentage, so they're more option trade setups. But you can see how this one had a left-right combo right off the T line. Now you're at the breakout level. If this opens positive, that's going to kind of confirm the scenario that the markets themselves may be heading up into new high territory. LRCX, nothing. You're kind of caught in a sideways wedge. I probably wouldn't be long or short. You don't have a buy signal. I'd be trading something else. All you can do here is stay long. Notice the little gap up that started your 45 degree. Just have your stop below the T line. Yeah, I think it's candlestick trading, eliminating emotions. The T line is this black line, the 8 exponential moving average. We call it the T line because it's the trigger line. If you see a buy signal and a close above the T line, you can stay long until you see a sell signal and a close back below the T line. The light green line is the 3T line, which works more effectively the further away you move from the T line. Okay. We have the prospect of going into another wave to the upside. Remember, it's not so much the fundamentals out there right now, it's the investor sentiment that's going to move these markets. Right now, there's nothing showing us any bearish sentiment, and that we just hit an all-time high. We might go the next 3 weeks of hitting all-time highs each day. So with that, reminder that any of you that are still thinking about the lake, get with us because we spots, and you don't want to miss out on that good food, good wine, good education, and great jokes. All right, everybody, have a good evening. We see you bright and early tomorrow morning.